Okay, so good afternoon, everyone. We're going to talk about, as you see, the PSB Alliance, building the world's largest unified supply chain financing platform. Now, although I would expect that many people from Singapore and India can deconstruct that and understand what it's about, I think since this is 130 countries, I believe, at the Singapore Festival, we're going to have to maybe deconstruct it a little bit. So first of all, let me turn to Eric. What is PSB? What does it stand for? And then we can get to how we get to a supply chain finance platform.
Sure. So PSB Alliance Private Limited is an umbrella entity created by 12 of the largest public sector banks. So all the 12 public sector banks, government-owned banks in India, have come together and created an umbrella entity to do common IT and business processes. So it's a private limited company held equally by all the 12 banks in 8.33% share. It's not a listed entity. It's only closely held by all the 12 banks. It's for the banks, by the banks, and we undertake projects which are common to all the 12 banks, whether it be solving industry issues which relate to all the 12 of the largest government banks in India, or doing innovative, bringing innovative products and services like the one we're doing right now with Veefin. So that's what this entity is all about.
Great. And before we get to the fintech side of this, maybe can we have a few data points to triangulate what the 12 public sector banks in India comprise? I mean, can we talk about numbers of customers collectively, total assets? Because these are not trivial numbers.
Absolutely. So I think put together the 12 public sector banks in terms of the customers would be close to 1,000 million, close to around that, with SBI being literally about 500 million customers in a single bank.
So a billion customers.
Yeah. So
1 billion customers.
Easily. Number of accounts customers would be that. The number of branches that we see is around 86,000 currently.
86,000 branches. Okay.
86,000 branches, and I think total balance sheet size would be about 60% of the, roughly about 55% of the
total assets of the banking system in India.
Banking systems. Yeah.
Okay. So that's
That's
okay.
large.
So anything that's happening in fintech collectively for this group is very significant.
Absolutely. It's I think it would be one of the largest platforms that any fintech company could even imagine to get onboarded onto. So as long as they have a very unique proposition which is helping the banking industry resolve some issues or carry new products to the market to increase its share, I think that's what the entire genesis of this company is all about.
So let's go, now we can dive down into the specifics of supply chain financing. For those that maybe aren't as familiar with India, but most people have heard that India has done a lot of investment in public infrastructure in the financial sector, whether it's about ID, whether it's about unified payments. But why work on supply chain financing? What are the gaps in the system that this is going to fill for the public sector?
So I think MSME financing in India has been very low penetration. Supply chain finance is one of the MSME financing products which one is really looking at very aggressively at, because they really cater to the last mile of the manufacturers, the distributors, the sellers, etc., which comprise of a pretty large population. Right now, one, it requires a very special technology need, which most of the LMS systems don't really meet. So that's one area. The penetration is not too high in this particular segment. So that's the market or the growth opportunity which is there. And I think the public sector banks owning literally 55% or close to around 50% of the market share, most of the anchors which one would really see are account holders of this public sector banks in some form or shape or the other. rather they have credit lines or limits with these banks. So now it's time that since they're already financing the anchors, it's time for these banks to really get into the last mile financing of these distributors, vendors, etc. So I think there is a very, very large potential that one really sees in this particular market. And in India, since it's basically a short-term finance, it's secured to a very large extent. I think most of the banks are pretty much amenable to do this kind of financing. So it's really a very large opportunity, and that's where we saw that the private banks have really embarked and are taking over market share of the public sector banks. So this was a very, very good opportunity for the public sector banks to come together and create a marketplace where they could do the financing of this between themselves. So that's what we are looking at.
So it's addressing two challenges really, as I'm hearing. One is that in general SMEs are a challenge, and then you take something like supply chain finance, which is short term, which is the double challenge. So so let's describe how is the platform helping to address this, and how do you do a collective thing like that between the banks while still protecting we're not just talking about consumer protection here, we're talking about who are the clients of companies, and what are the nature of the business deals they're doing. How do you do something like that and you help make things happen while you still preserve the confidentiality that's necessary so that both the bank's customers and the respective banks are all feeling that their key business assets are protected?
Okay. So I'll just break the answer down. So one is PSB Alliance as an entity is created by these 12 banks, and that's a lot of comfort that they have on an entity like ourselves, right? So it's by the banks for the banks. So it's not any third party who's coming and kind of doing the work there. So that's the amount of comfort that's already there with the 12 banks, that this is not a compete, this is not something different. Now, what we are really creating with Veefin as a platform is really creating a marketplace for supply chain finance. So what's really going to happen is that we have all the anchors, the fintechs, anybody who wants supply chain financing to be done will come onto this particular platform, right? The 12 banks BREs, or the business rules engines, will be configured within Veefin. So exactly Veefin will know what kind of proposals should be sent to bank A, B, C, which meet their business rules engine. So we have an agreements or MOUs in place, including sharing of the business rules with Veefin, which will be configured for each of these banks. So when a particular proposal comes in, the preliminary checks will be done by the platform. It will understand automatically as to which bank the particular funding can go to, and accordingly it will be spread across these 12 banks. So it might happen that a particular kind of a proposal might only go to 2 out of the 12. Mm-hmm. So increasingly there will also be, the banks will start realizing that why certain banks are doing much better and they are not able to do that, and tweak the business rules to be able to capture more of the market. So
they're going to be able to see the collective performance of each other, so there's going to be a sort of competitive pressure that's generated by this. At the same time, you're doing this initial brokering, triage, whatever you want to call it, where based on whatever sector it is, whatever the particular terms of the supply are, you know which banks are more interested in different types of deals.
So what's also happening? So what's also happening here?
Try that.
Yeah, let me try this one. So what's also happening here is that it's not just the 12 public sector banks that we're talking about. The entity is owned by the 12 public sector banks, but all the lenders in the country, including the private sector banks, the non-bank finance corporations, all of them will also participate on the platform as a lender. So in effect, you're talking of one single supply chain finance backbone across the entire country for accessing business, as Eric was saying, from all platforms or fintechs or corporates who are interested in getting financing for their supply chain. So let me give you an example. Say there's a B2B marketplace. The B2B marketplace has a few thousand suppliers. It could have a few thousand buyers out there. all of those buyers and the suppliers have data on that platform, a B2B marketplace. So when that marketplace comes and connects to PSB Alliance, they in turn are also sharing their data, their information about their customers and saying, this is the kind of information that we have about our customers. Therefore, which lender would be interested in financing them? That's the benefit. That's the benefit of having a platform like this. And the same thing, if you have 300 such platforms, you can't expect every single lender or these public sector banks to connect to each one of them, because then you're talking of 300 connections. But with Public Sector Bank Alliance, what happens is there's going to be only one connection. So each bank has only one connection to the PSB Alliance platform. They in turn, if they have the, as you said, the supply chain finance LMS, we then provide them with APIs. If they don't have that, they can use the PSB Alliance supply chain finance LMS product for underwriting and managing the supply chain finance business of these platforms. So what they are doing outside, they can continue doing outside. But if they would like to get sourced business from these platforms, they use the PSB Alliance. So that is the many-to-many relationships we are bringing down to a single pipe.
So the devil's advocate question here is if they've already had problems because this is a short-term unsecured loan, at least unsecured in a conventional banking sense by fixed collateral, right? You're talking about using the receivable as an alternative collateral. If they were uncomfortable with that in the beginning, how does the platform really, how does it actually encourage them to be more comfortable?
So it's not the platform which encourages them. The risk metrics and the risk appetite of every bank remains the same. What the platform is doing is that the entire effort which was required in going out and connecting with all these platforms outside in the outside world, negotiating with them, vendor onboarding takes how much time? It takes months at every bank. Now you're cutting short the entire vendor onboarding. The interest rate that they're charging to the end customer is their own. But the fees that they pay to any of these platforms is one single fee structure now. So you're removing the headache of negotiation, you're removing the headache of integrations and bringing the entire markets. So it's like because you use the word marketplace, in a marketplace is brilliant when you have buyers and sellers. On day one here you have 12 public sector banks, 55% of India's banking sector as a buyer standing out there. That effectively means that the entire seller market which is there, they are ready to come on. So the moment you have sellers and buyers, it's a virtuous cycle which starts. So now you have business out there. Risk is still theirs. And the last piece which makes sense is because now you have underlying data of what's happening on the platform. Okay? You understand what kind of credit rating, what kind of banks are underwriting, what's the kind of size of portfolio, what's the size of delinquency. All of those is not available in the market today. That then brings in competitive pressures and it's knowledge which is being shared, which is making everybody move up the chain.
I think one more thing is that there were two very large challenges, right? Each of these anchors literally have more than somebody has 100,000, 200,000 distributors, vendors to be on board. It was a real challenge. So this business was being lost by the public sector banks to the major private banks because of their ability to go to the market and get those customers onboarded. I think onboarding was a very large challenge which Raja really spoke about. Today, invoice discounting is happening in all banks. I think as Raja said, each one's risk appetite is different from the other. But today this business is happening. But I think it's happening in a very fragmented manner. With this being set as a single platform, most of the anchors are anyways with these banks. In some line of credit they are there. So they know the pedigree of the anchors and their commitments, etc. So I think it's a win-win situation for the banks because now they're getting in business. It's not necessary they'll underwrite all the business, but today they're getting in the bulk of the business will actually come to them as a platform.
And at the end of the day, maybe just like as we know in the world in general, not all enterprises that have an outstanding invoice need the money early, right? And so even if we wouldn't expect everybody to get financed because not everybody will want to be financed. They're happy to wait the 30, 60 days and get the full payment or whatever is going to happen. But but so effectively the platform is enabling the banks to offer their larger buyer customers a way of putting their suppliers on a platform, on a collective platform at much lower cost than if each of the banks had, or if each, even worse, if each of the suppliers had to figure out a way to digitalize their supply chain.
Absolutely. And I think the essence of supply chain financing is also the speed to market. Predominantly, if you don't have a platform which is really powering this thing, then your ability to respond to the need for that particular customer is going to be pretty large. So it's actually benefiting the buyers and the sellers by making sure that there is capital which is available, is being utilized in a particular period of time.
And what it's also doing is not just allowing the banks. I'll give you an example. Let's say that the platform, which is a B2B marketplace, has 10,000 customers. Now, you go to the largest bank has risk appetite only for 1,000 of them. So what the bank would say, it doesn't make sense for me to integrate with you because you have only 1,000 customers. So if there are 20 such platforms which each have 1,000 customers, it doesn't make sense for the bank to connect to 20 platforms for 1,000 customers each. However, now when they connect to PSB Alliance, they are able to get those 1,000 customers across 20 banks, across 20 platforms, that is 20,000 customers on the PSB Alliance platform, which individually they would not have been in a position to do it because of scale and efficiency, but because now they don't have to incur any additional cost, because the cost of integration is already taken care of in the first time. That's the huge benefit.
So this is going to also get round one of the dirty little secrets of supply chain finance, which is that, at least from the SME support point of view, which is that very little supply chain finance anywhere around the world actually is going to smaller firms for these reasons. But you're saying through enabling the collective onboarding in one place and having all the information, you're going to make it feasible for many, many more suppliers of smaller and smaller buyers to participate in this.
Absolutely. Our idea is to also bring the NBFCs onto the platform, because if below a particular rating, these public sector banks would not be lending. So we'll also create an ecosystem for the NBFCs to come onto this platform. So I think it's more of an inclusive process, and I think there is a very heavy push even for the government, for the small and medium enterprises to really have access to finance. So that's what's really enabling it.
So for our people that know a little bit about India, there is a platform called TREDS in place as part of the public infrastructure.
Sure.
For our India nerds, let's talk about how does this complement what's already being done with the TREDS platform, because at least my layman's understanding of TREDS, it's supposed to be a comprehensive platform for all trades, in theory.
In theory. So what happens on TREDS is, it's a regular, first, the big difference is it's a regulated platform. TREDS does the KYC, which PSB Alliance does not do. They don't do KYC on customers. The second big difference is, on TREDS you have only reverse factoring programs, usually. That means you have the large corporate, and if there's a default which happens, it's a large corporate who is on the hook. That is not a product which all corporates are comfortable with. That's the reason why, despite TREDS being in place for the last 5-6 years in the market, I think 7 years, the volumes that you see on TREDS are still a fraction of the numbers which a country like India should have. The other big difference is, TREDS is only for supplier financing side. But in a market like India, which has a fragmented distribution network and large country, the dealer finance, the distributor finance is a much larger piece of the business, which they don't do. These are the two major differences I would say between TREDS and the PSB Alliance platform, other than the fact that the PSB Alliance platform is not just supply chain financing, it's supply chain finance, trade finance and SME financing, everything.
So you get all the data about the transactional histories that the financial sector can use. It works you can offer a wider variety of products through it, and yet it integrates with the KYC service you get from the TREDS platform.
True, and you answered the third difference. The third difference is that you don't have marketplaces on the TREDS platform. On TREDS platform, you have only corporates. But the key data, because with the immense digitization which has happened in India, India is at the forefront of digitization. The amount of data which each of these silos who have That data is important for the bank to actually do the underwriting. That is not there on trades. That is what PSB Alliance is solving for.
So this is going to enable as long as they're doing their B2B in digitally, it's going to incorporate many more business-to-business deal data than the Treds platform is doing to date.
Absolutely. For example, catalog providers, like we have large players like in India Mart, okay, who have already signed up to be on the platform. India Mart is among the largest B2B marketplaces in India. They cannot go to a Treds, but they are on the PSB Alliance platform so that all their customers can get access to financing at the point of buying and selling, like in true embedded finance.
Okay, so it's almost like the equivalent of putting Alibaba onto the platform, right?
Absolutely right. So if this were in China, Alibaba would be connected to the PSB Alliance platform.
Very interesting. So what's the state of play for the platform today? What's the rollout schedule?
So bulk of the technology is already in place because Veefin has been doing this with individual banks since last 5 years. So most of the banks in India, NBFCs anyway, use Veefin solution for the supply chain finance. But with PSB Alliance coming in, we are just having to change the architecture to bring all of them together on the single platform. So March 24 is when we go live. So our first transaction expected in March 24. That's just 3-4 months down the line.
So watch this space in SFF 2024, or maybe Global Finites Festival in India 2024. You're going to hear about where this has come, right?
Absolutely, and this will become like the India stack which is there, which is being exported across the world. We see huge potential in taking the same stack that we're building with PSB Alliance and exporting this to other parts of the world, because there is the same need is felt in multiple countries, and specifically in the ASEAN market, in the African markets, the same model can work there.
Okay, so do any in our audience have any questions about this? No questions?
You answered it very well.
Well, I'd like to thank Raja and Eric. This is very
Matt.
exciting new development. And some last words about the PSB Alliance for people to take away?
So I think we are pretty much keen to launch this platform. We've seen the commitment which Veefin has also shown. It was a long process, getting 12 banks on board, making them understand a concept, making them agree to a concept. So I think we played it very well. We believe that this would be a game changer, especially in the MSME financing side. And I think we're all geared up for March launch now.
And given where we started from, looking at the size of the customer base, the size of the asset base, if it takes a little longer for these banks to make it happen, it's probably worth the wait, because it's going to affect so much of the market.
Absolutely.
Very good. Thank you very much, gentlemen.
Thanks a lot. Thank you.